What's going on, guys? In this video, I'm going to be talking you through a trade setup that I'm going to be taking on my Take Profit Trader 150K evaluation. Either that or my 50K evaluation, not sure which one yet, but I'm going to talk through you guys my trade plan and how this setup works. So this trade setup is based on the strat trading system. So all the rules here I've developed based on basically using that, but with a little bit of variations. And I'm going to be talking through those variations right now. So the first thing I want you guys to notice is that on the daily, we have this uptrend that's been established. And that's an uptrend that's on the higher time frames as well. We can look at the higher time frame charts. This is a yearly chart right here. And this farther quadrant, the quarterly chart right here, monthly chart right here, weekly chart right here. And as you can see on the monthly, we are above the pivot highs that were established right here. So we are aiming for the 64,135. And that is the previous quarter. So that would be Q3's high right here at 64,090. Right. So let's see what that would be July's high over there. And we're going outside bar right here because we've hit the 50% point on the quarterly chart. So monthlies, quarterlies are all aiming towards the upside, which is good. We have a little bit of a pullback on the weekly, but it's nothing too much to be concerned about because we have a strong previous week bar, and then we have this nice little updrift right here that we can put a arrow on to further illustrate the point. That's what's happening on the weekly. We have the this upflow on the weekly, even though we have a little bit of a pullback right now. Start the week. Okay, so let's look at the lower time frame chart. So now that we have established that the higher time frames, the yearly, the quarterly, the monthly, the weekly, are all in a nice uptrend. What we want to do, since we are using the strat trading method, is to start establishing what's where price is broadening, because that's really the backbone of the strat is drawing these broadening formations and taking our profits where we think magnitude is going to go. So I'll talk about the concept of magnitude right now in a second, and how we're going to trade this going into the Asian markets opening up here in about an hour. But first thing we want to do is you guys can see these broadening formations that I've drawn right here on the 2-hour chart. It's the same broadening formation that we have here on the 1-hour chart. And I don't think let's see. Let me go ahead and make this visible on the lower time frame. I just People are probably laughing at the way I'm doing this right now. There we go. This is what I was trying to do. Okay, so we have these broadening formations that we've drawn right here. So we have the broadening formation that's going on the daily. And so the idea behind time frame continuity that I want you guys to understand is that even though price continues to take out highs and lows, and that's like what we expect, that's why we use the broadening formation as a crutch to judge distance and magnitude, even though that's what we expect price to do. We don't like just blindly, dumbly always think that it's going to continue broadening out and like in this perfect megaphone like that forever. It's not going to do that. When we have time frame continuity, it's going to take out the highs, and then instead of coming back and taking out this low right here, it's going to probably come down to like this 50% point, and then it's going to start making a new range. And then the megaphone pattern, that's when the megaphone pattern is going to continue going up in an uptrend, but you have to understand that it's not gonna go in a nice clean range up. It's gonna do this megaphone and stuff that it's doing right here. So we kind of use that fact, that idea, um, for our trade setups. So our megaphone, we have this megaphone drawn right here, and you can see it's kind of starting to trend upwards. And I don't think it's going to come back all the way back down to this low right here. I think that because we have such a strong higher time frame, that we can expect this daily chart to continue being bullish, and like I was saying, probably gonna not come back further down than the 61,410 area right here. So, but we're not going to be really paying too much attention to the daily right now because we are day traders and we are managing our risk on a lower time frame, like the 2 hour chart, the 1 hour chart, the 30-minute chart, as you guys can see right here. So I have the 30-minute chart set up right here, and on these lower time frames, you find it harder to judge things based on those one bar. Like on the daily and the weekly, we can judge it like bar by bar. On the 2 hour, we can kind of uh, zoom in, and then we are gauging distance uh, based on 1 or 2 bars at a time. Where on the 30-minute chart, I want to look at clusters. I want to look at clusters of bars because um, there's just not as much price action happening on the lower time frames for, specifically the New Zealand dollar. Maybe if you're looking at the Nasdaq or copper, crude oil or something like that, we can zoom into 10-minute chart and then bring down these time frames, maybe one order of magnitude. But for now, 30-minute chart, that's kind of my lower time frame that I'm going for, and then I want to find my moves out of. So I got this rising wedge pattern. So you guys can see that this is kind of a classical technical analysis idea right here, rather than a purely strat idea. And I'm just thinking that this thing's going to break out of this wedge because it is giving us some upside signal because it's rising, and then we also have the higher time frame going in our favor, like we have already established. So you guys can see these markers right here, these blue markers. This is defining our range and the range that we're looking to take out. Let me zoom in a little bit here for you guys. Is, we're really trading to the next pivot when we're trading the strat. So we're looking for these breakout points, really. These nice clean breakout points, which we have right here. Right now that the market is closed at 62,130. And then once we get that clean breakout point, we have about 61 ticks in range to the next nearest pivot on the hourly chart. Well, we could see that a little bit cleaner on the 2 hour chart. It's this bar that we're looking to break out of right here. And it's pulled back a little bit, but nothing to be too worried about. We'll just look for the continuation trade right here at above 62,155. And we don't really have too much economic news to worry about, but we do have Bank of Japan interest rate uh, decision coming out at, let me check what that is. Well, that'd be 2200 Eastern time, so about 9 o'clock Central time or 7 p.m. Pacific time. Okay, so yeah. So right now we are currently good to go between 62,130, and let's see, the place where we're going to be managing our risk on this trade is going to be the 50% point of this little chop zone that we got right here, right? So that would be about let me get the fib. It's going to be 62,070, so let me put a mark right there. Automate that. Thing out of the way. 62,070. And that gives us about, what is that? 30, 60. So about 12 tick range to a 12 tick stop loss range to a 61 tick upside range. And you probably wouldn't take the full 61 ticks. Let's see what's the difference between that right here. So 435. Okay, so about 20 ticks of difference. So you might catch like 40 to 60 if this thing goes really quick. But you're probably looking to take your target at the 40 tick range. So that's, I mean, we could put up, let's not make this difficult. Let's put up the risk to reward tool. So So let's see. That's a 3R trade right here to the 62,310 area. And this is a 5R trade to the 64.35 if you can hold a little bit longer. And that's the trade set up to the long side. And that's the most immediate one that we can get right here. Now, if this thing starts going up and then failing and coming back through this 50% range that we built right here, this, like, we can see the broad information that we got right here. So came out, took out these previous highs, have failed, and then I can see this coming through, and if we get below this 62,030 area, well, then that's a different picture. We got all this downside range, about 44 ticks, and it'd probably be about the same. I think I measured it was about 9 ticks in distance. And again, let me go ahead and just pull up the position tool so we can see what we're dealing with here. Now we would be getting in probably in about right here. And yeah, we want to. So, I mean, it's about the same trade, 3 to 5R, depending on how it goes. And yeah, so that's how you set up the trade. I hope you guys saw how I used the brown information there. I do have a quick, like, 5-minute walkthrough video that I made of the strat in case you guys need a crash course on the things I was talking about in here, but I feel like it's better that I just make these short and sweet videos walking through actual trade setups using the strat, and then you guys can ask questions in the comments. Um, and you can learn that way rather than some cookie cutter video with cherry picked examples. This way I'm actually showing you trades that I'm taking. So I'm going to be taking these for like one contract for right now. I'm just trying to get my feet wet on this take profit trader account uh, that I have going. I have 2 of them going, and I have another one that I'm gonna activate in the morning. So, well, not activate. It's just an evaluation. But anyways, that is the trade setup. You guys have my levels, the places where I am entering. And actually, I guess another thing that I want to clarify is that, yeah, the market's open up again in about 40 or 37 minutes. And when they do, that is typically the slowest period. I find that the markets move the best at the uh, like an hour after the Tokyo Open. So that's like 6 p.m. 6 p.m. Central Time. So 7 p.m. 7 p.m. Central Time is like, that's really when the most volume comes in for the Tokyo session or for the Asian session. And like, right now it's at a good point. You could probably take this long trade to right as the Asian session opens. And I'm not guaranteeing you guys anything happens or anything like that. These are just trade ideas. You know, do your own due diligence. I'm just giving you an example of something that I might be doing. But yeah, once the market opens, because this is a nice, good risk reward point, I'd probably go long. Hopefully, hope I don't get stopped out at the 50% point. See what happens throughout the session. Hopefully, when that 7 p.m. Central Time, uh, open for the Asian session comes, where like China and Japan and all the Asian markets are putting in all their positions, maybe I'll get a good boost to the upside and catch the full 5R on this trade. So that's what I'm going to be looking to do. And if not, maybe this thing is kind of lackadaisical to the upside and comes back through to this range. And it could do like something like boom, takes out this high, takes out the low, then goes back up. Or it could you know be kind of lackadaisical to the upside and then just fall through and come back to the low side of this broadening formation instead. Um, so yeah, that's my plan, you guys. I hope I made sense there. Again, this is using the strat trading method. There's 1,000 tutorials on the internet teaching this sort of trading. So I hope I didn't have to clarify the terminology or different things that I'm using here. But yeah, this is I mean, I feel like this is a nice setup that I have going on here, and we'll see how it works out. I'll see you guys in the next video. I'm going to be doing a similar analysis for the Mexican peso because I think I see a nice trade going on right here and some good patterns. So if you guys like this video, go ahead and subscribe for me. That would do me a huge favor, and I'll be continuing to pump out this type of analysis if you like it. So I'll see you next time.